Hello and welcome to the 2015 Breckenridge Report on GLOBALSTAR Incorporated, conducted for the A.B. Freeman School of Business at Tulane University. My name is Thaddeus Pinikavich and I'll be narrating this equity analysis report. This report was created by an investment team composed of Savannah Gomez, Natalie Yanko, Anna Hernandez, and myself. We give GLOBALSTAR a rating of market outperform with a 12-month target price of $2.60. Going over our agenda for today, we will give you a quick company overview. We will then go into our valuation method and how we got to our 12-month target price. We will then do a quick industry analysis, followed by the risks that going forward for GLOBALSTAR's business and GLOBALSTAR's equity holders. And finally, we'll conclude with our investment thesis. GLOBALSTAR is a Covington, Louisiana-based mobile satellite service provider. GLOBALSTAR provides voice and data services to remote and underserved areas and operates a network of 32 satellites in low Earth orbit. GLOBALSTAR provides service to over 550,000 subscribers, including government, commercial, and retail customers. GLOBALSTAR primarily operates in North America, with business expanding rapidly in South America and elsewhere. GLOBALSTAR was formed in 1994 and granted a spectrum allocation by the FCC in 1995. GLOBALSTAR launched its first satellites in 1998, but ran into financial issues and declared bankruptcy in 2002. In 2004, Thermo Capital Partners purchased GLOBALSTAR and reincorporated it as GLOBALSTAR Inc. in 2006 and issued their IPO. GLOBALSTAR has two main product lines that utilize their network of low Earth orbit satellites: Simplex and Duplex. Simplex products are one-way communications devices which are able to connect to GLOBALSTAR's satellite network and send data, although they cannot receive it. Simplex products include GLOBALSTAR's SDX and Spot products. GLOBALSTAR's other main product offering are its Duplex products. Duplex provide two-way satellite communication, such as sat phones. Duplex products make up 47% of GLOBALSTAR's revenue, while Spot and Simplex products make up 40% and 17% respectively. GLOBALSTAR's products have global coverage, which is illustrated in this map with the dark shading representing the strongest coverage, the light yellow shading representing weaker coverage, and the purple shading representing weak intermittent coverage. GLOBALSTAR has looked to expand its service offerings and it has petitioned the FCC to allow them to utilize their spectrum for other purposes. GLOBALSTAR initially petitioned the FCC to allow them to repurpose its 2.4 GHz spectrum for terrestrial use in November 2013. GLOBALSTAR's petition was called Terrestrial Low Power Service, or TLPS for short. TLPS proposed before the FCC asked to utilize 11.5 MHz of GLOBALSTAR's licensed spectrum and an adjacent 12.5 MHz of unlicensed spectrum to create a new Wi-Fi channel. GLOBALSTAR plans on utilizing this new Wi-Fi channel as a paid-for premium channel which will charge users. The FCC ruling will determine whether GLOBALSTAR will be able to monetize its spectrum and generate a new revenue stream unrelated to its core satellite business. This is key to GLOBALSTAR's continuing operation, and the stock price has become an option on the TLPS ruling and the resultant value of GLOBALSTAR's spectrum. Due to persistent negative annual profits over the past 5 years, traditional valuation methods such as DCF, earnings multiples, and comparable multiples are untenable, and we had to resort to less traditional valuation methods. The primary driver for GLOBALSTAR's equity value and its future profit-generating capacity depend on its ability to monetize its spectrum holdings. In looking to value GLOBALSTAR's spectrum holdings, we use the industry method of spectrum valuation, megahertz to population. In this calculation, we are assuming 22 megahertz of spectrum for TLPS and 318 million people covered by the spectrum. To calculate megahertz population, first you take the spectrum's width in megahertz and multiply it by the population covered by that spectrum to get the megahertz to pop. Then you take that megahertz to pop and multiply it by the price per megahertz pop to get the enterprise value or spectrum value. And then to get the price per share, you get the enterprise value plus cash minus debt divided by shares outstanding to get the equity value. As the width of the spectrum and the population being covered are constant, to get at the varying valuations for GLOBALSTAR spectrum, we had to vary the value of the price of megahertz pop. We varied it from 20 cents to 90 cents based off historical acquisitions and our estimates of the monetization potential of TLPS. We then weighted it by the likelihood of TLPS being approved or denied, 75% for approval and 25% denial, giving us a range in price of 18 cents per share to $33.86 per share, which we then averaged down to get to our 12-month target price of $2.60. Moving on to the industry analysis, the satellite service industry is very large with many different types of players. The main services they provide are point-to-point communication, data services, long-distance and remote communication services, and reselling of satellite telecommunication services. The industry sees stable growth at about 3.8% per year and is not very highly concentrated with regards to market share. In this table you can see the distribution of market share by revenue, with 4 major firms making up roughly 50% of the sector's revenue, while GLOBALSTAR makes up roughly 1.4% of the sector's revenue. In analyzing GLOBALSTAR's peers, we selected 5 firms: Inmarsat, Iridium, Intelsat, EchoStar, and Viasat. In comparing GLOBALSTAR to its peers, we see GLOBALSTAR has a much larger market cap, while much lower price to book. Furthermore, GLOBALSTAR has a much higher debt-to-equity ratio due to its highly indebted position and also has near zero earnings per share. Furthermore, GLOBALSTAR has a negative return on assets compared to a positive return on assets of its competition. Getting into the risks GLOBALSTAR faces in going into the future, operationally they could face satellite failures. GLOBALSTAR's satellites have failed in the past and there's no guarantee that they won't fail in the future. Financially, there are a lot of risks to investing in GLOBALSTAR. There's a large risk of equity dilution, there's a large bankruptcy risk, and there's a high level of debt in GLOBALSTAR. And regulatory risks include the risk of the TLPS proceeding being denied rather than approved. As mentioned in our valuation section, GLOBALSTAR's value hinges almost entirely upon TLPS as their core business is struggling. GLOBALSTAR has lacked the necessary liquidity to meet its debt obligations and maintains equity purchase agreements with Thermo Capital Partners and Terrapin, who purchase GLOBALSTAR's equity upon request. As of Q3 2015, GLOBALSTAR has $88 million in liquidity remaining, including all of its equity funding agreements. And taking into account forecasted capital expenditures and debt service payments, this liquidity is forecasted to dry up in 18 months. Upon which time, if GLOBALSTAR is yet to generate a profit or monetize TLPS, it will be in default on its co-face agreements. In case of default, GLOBALSTAR cannot issue more debt due to the covenants in its co-face agreement. As a result, it is likely that they will have to raise equity to meet their debt service requirements. Furthermore, the equity which Thermo and Terrapin own have anti-dilutive covenants, meaning that any future equity issuance would be to the detriment of all other shareholders. Moving on to our investment thesis, we had 4 main points to cover. 1. Global expansion will increase subscriber base with little fixed costs and reduce dependence on North America, diversifying GLOBALSTAR's business. 2. Ground infrastructure to support the second generation of GLOBALSTAR's satellites will enable full use of their capabilities. 3. High levels of debt and contractual obligations represent a liquidity concern for the company moving into the future. And 4. Pending regulatory approval to use the new spectrum will determine if the company will have a new source of revenue and ultimately their spectrum value. Final disclaimer, the Birkenroad reports are produced solely as a part of an educational program at Tulane University's Freeman School of Business. The reports are not investment advice, and you should not and may not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.